Hello, fellow parents. Let's get into how to basically optimize your tax return in light of your wonderful children. So, my name's Natalie. I'm also a parent. Maybe you'll hear it in my voice, but I am a parent of 2 kids under the age of 4. Just started kindergarten during flu season, so I feel ya. I'm from California, based in Vienna, Austria, and just like you, moved abroad, realized I had to file US taxes from abroad, and was like, how, right? Because you look at the US tax softwares and they're honestly not very helpful if you're living abroad. You go to the expat focus firms and you're like, wow, why do you want to charge me like $2,000 for this simple tax return? So that's why we created MyExpatTaxes, right? We created it so there was a one-stop shop for all US taxpayers living abroad to easily file their US taxes. And now we're the leading US tax software for US expats. So something I'm very proud of, and a software that I also use to do my US taxes. What are we going to talk about today? Well, again, the focus is on your children, on our children, and how do our US children affect our US tax returns. So we'll talk about, the child tax credit, child and dependent care credits. Can you even claim your child as a dependent? What happens if you use certain expat tax benefits? And also kind of this unknown area of what does your child have to report to the IRS, right? So let's talk about the child tax credits. A lot of information on this slide, I know, but with tax, there's always a lot of information, isn't there? So we're gonna sift through it. So child tax credit is probably the most important thing for you to know in terms of a refund, right? Or potential credits on your tax return. And the child tax credit is comprised of 2 different layers, actually. So there is the child tax credit, so the whole layer, and that is basically a credit that can lower your US tax bill. Now there's a second layer to that. If you don't use the entire credit to lower your US tax bill, a good portion of that credit is refundable. Not the whole one, but a good portion of it is actually refundable. So what does that mean? Well, let's focus on 2023, because obviously we're filing 2023 returns now in calendar year 2024. If you have a child under the age of 17, under the age of 17 in 2023 with a valid Social Security number, you would have been able to claim up to $2,000 as a non-refundable credit on your tax return per child. And if you didn't need that credit, because say you had enough foreign tax credit to cover your US tax liability, $1,600 of that credit is refundable. So yes, you heard me right. If you have 1 child, 2 children, 3 children, etc., all under the age of 17 at the end of 2023 with a valid Social Security number, and let's say you had foreign wages, you had enough foreign tax credit to cover your US tax liability, you're looking at a potential refund of $1,600 per child. Now, that amount is higher in 2023. You'll probably notice from all the text above with the different years, but this amount changes, right? So depending on what's going on, inflation, etc., it used to be at a steady $1,400 as a refund, and since last year, it's increased, right? So it increased to $1,500, and this year it's now at $1,600. So how do you claim this refund? Because there's always a fine text. And that's what we're here to shift through. What is the fine text of this refund? So the first one is you need to have a minimum amount of income. So what that is that you have to have at least more than $2,500 of earned income. And earned income is worldwide wages. So it can be US wages, it can be foreign wages, it can be US self-employment income, so net income, or foreign self-employment income that is subject to self-employment tax. That's super important because this is quite frustrating for a lot of expats, but if you are self-employed and you're using the totalization treaty to exempt your foreign self-employment income from self-employment tax, you cannot use your foreign self-employment income as earned income in light of the child tax credit. So I don't know why the IRS has made the rules this way, but they have. So if you look at the instructions on what earned income is and how to calculate earned income for the purposes of the child tax credit, it says you cannot include any self-employment income that is not subject to self-employment tax. And keeping in mind, it's usually more optimized to not pay self-employment tax rather than try to grab the refundable child tax credit, just because self-employment tax is normally higher. It's at 15.3% of, any income over $400. But it is frustrating. It's frustrating because obviously we have foreign wages that's also not subject to US self-employment tax, but you can use that as earned income. So I'm sorry, I don't have better news, but I want to make you aware of that if you are, a self-employed US parent and that's all of your income and it's not subject to self-employment tax in the US because of a totalization treaty, then you do not meet the minimum income requirements, even if it's clearly over $2,500. There are also maximum income amounts. So this is based on adjusted gross income. So all of your income, minus any adjustments, you would see this on Form 1040 in adjusted gross income line. If you are married filing jointly, your income can't be over 400K. So this is a pretty high threshold. For all other filing status, it's 200K, which is, to be fair, still a pretty high threshold, right? I think at that point, you're maybe not so concerned about a $1,600 refund. But for the rest of us, if you are over the minimum income threshold and under the maximum, you are potentially eligible for this refund. There's a couple other things to talk about, but you're potentially eligible for the refund, which is your earned income minus that minimum income threshold of $2,500 times 15%. Again, you can hear it in my voice, fellow parent of small children, and up to the refundable child tax credit of $1,600 per child. So, next question, which children can you claim, right? Are your children actually seen as dependents on your US tax return? So a couple of requirements, obviously they should be living with you for more than half the year, and keeping in mind that if they went to school somewhere or, they went to summer camp or something, that still counts as living with you, right? So those are just temporary absences. And they couldn't have paid for more than half of their own financial support. So you and your spouse, right? Or even if your spouse is a non-resident alien, so a non-US citizen, as long as basically you, the parents, have paid for more than half their financial support, you can normally claim them as dependent. But of course, they do need to be a US citizen and they do need to have a valid US Social Security number. I think the Social Security number is probably the hardest part for a lot of, especially expats out there that just learned about their filing requirements or they don't have too many ties to the US anymore. But if you don't have a Social Security number by the due date of your tax return, including extensions, you cannot claim your child as dependent on that tax return. And I just want to make this clear. If you gave your children US citizenship, they will be subject to filing US taxes later on in life. It's not about having a Social Security number. It's about citizenship. So if you already gave your children US citizenship, please also give them the gift of just getting them a Social Security number, because it will be so much easier for you as a parent and them as young children under the age of 11 to have a Social Security number, because that process is, you kind of just do it through your consulate abroad. However, if you wait, till after they're 11, or you wait until they're an adult to get a Social Security number, it's a lot harder because it's very rare that a person over the age of 11 gets a new Social Security number. So there's a lot more restrictions. So again, if your child already has US citizenship, get them a Social Security number. They're going to need it when they file taxes because of their citizenship. And it's going to help you in the long run because you can claim them as a dependent on your tax return. And there's a lot of refunds on the table, that you can potentially get if you claim US children on your tax return. So There's a lot of time that can be required to process the Social Security number, so just plan in a timely manner. Obviously, we're coming up to the April 15th deadline if you're watching this webinar live. And so make sure to file an extension to October 15th, which you can do through MyExpatTaxes, right? A free extension, so that you have enough time to get a Social Security number for your 2023 tax return. Just so you know, as I'm filming this, I'm actually going to be in 2 weeks at the consulate locally to get a Social Security number for my second kid. So I feel you. It's a process, but a process we all go through. So again, is your child under the age threshold? So if they're 24 and a full-time student, you can still generally claim them as a dependent. But if they're, basically over that, they're no longer seen as a dependent on your U.S. tax return. And for the child tax credit, it's only for kids under the age of 17 at the end of that tax year. There was a little bit of a difference in 2021 because of the pandemic and all of that, but generally it's under the age of 17. So they have to be under 17 by December 31st, 2023 to qualify on your 2023 tax return for the child tax credit. Again, like I said, because the Social Security number is probably the hardest point for a lot of parents, is how do you get a Social Security number for your child? It all depends on where you are in this process, but what you have to do is you have to report the birth abroad, right? You have to make sure you get them basically a birth certificate from abroad. Once you get that birth certificate, then you can request a passport. You can request a U.S. passport. And then once you have the U.S. passport and you have the birth certificate abroad, you can then send that paperwork to the federal benefits unit. And then they will then give you the Social Security number. Most consulates will manage all of this in one process. So that's why I say it's best to get it all at once. So if you just, have a new child in your family or you haven't done any of this yet, try to do everything at once, right? It's just going to be the easiest process, but this is the general steps to getting a Social Security number. So you need to make sure you have the birth certificate already. You need to make sure you have the U.S. passport, which means you gave U.S. citizenship, and then you can get the Social Security number. So another credit, which is great, is a child and dependent care credit. This basically means that 50% of the cost spent on, child care is seen as a non-refundable credit on your tax return. So in 2021, again, because of the pandemic and obviously everyone having to work from home and kids not being able to school and just pure chaos, it was refundable, but generally it's non-refundable. And it just says, you can claim, depending on how many children you have, up to $6,000 as childcare expenses, and that can be a tax deduction on your U.S. tax return. So this slide shows you all of the most common tax forms in your tax package. If you're claiming, the child tax credit, you should definitely see Schedule 8812. That's the schedule to claim child tax credits. And if you're telling me, well, I file my taxes every year, I have children under the age of 17, they're claimed on my tax return, they have Social Security numbers, I have never seen a refund. I have no clue what you're talking about. Check your return for Form 2555. If you have Form 2555 in your tax return, that's the reason. That immediately disqualifies you for the additional child tax credit. So we'll talk a little bit about what to do if you've been using foreigner income exclusion, but in general, that's why it's so important to understand what are you filing to the IRS, what is in your tax return. So 1040 is going to be the overview form when all the schedules attach. Again, Schedule 8812 is going to be the form that tells you what's your child tax credits, what's the refundable amount, what's the non-refundable amount. 2555 is kind of this red flag form that says, okay, this is definitely why you're not going to be getting any child tax credit or any refundable child tax credit. And then 1116 is to claim foreign tax credits, 8838 is to claim treaty benefits, and of course, your FBAR and FATCA forms if you have to file those additional forms. So, foreigner income exclusion, probably the most commonly used expat tax benefit. Is it worth it? So, it depends. It really depends on your situation, and that's why MyExpatTaxes was built to really look at every single taxpayer situation, right, based on your income that you enter in your tax profile, and to optimize it to say what is the best approach to use foreigner income exclusion, to use foreign tax credit, etc. But in the end, the Foreign Earned Income Exclusion, Form 2555, excludes 120K of foreign source earned income from US taxation. It's great for those that need a lower adjusted gross income. So, for example, if you haven't filed for your stimulus payments yet, which again, the deadline to file for stimulus payments is June 15, 2024. So hop on it. We just had basically a webinar about streamlining and the stimulus payments. So have a look at that. But this will help lower your adjusted gross income. Now, this is also helpful maybe if you have student loan, repayments and you need an artificially low adjusted gross income. It's not a required tax form for US expats. You don't have to use this if you're living abroad. There's other ways like the foreign tax credit to lower your US tax liability, but it makes you ineligible for the refundable child tax credit. I cannot stress that enough. Now, foreign tax credit is the other approach, and this can be beneficial because it helps you build up foreign tax credit carryovers. For example, if you are earning a salary and you pay a lot of income taxes on that salary in Germany, you build up 10 years of foreign tax credit carryovers, basically all the foreign tax credits you don't use because Germany obviously has a higher income tax rate than the US. You can actually use that carryover for future pension payments in Germany, right? If you retire shortly after in that 10 years because you probably pay lower taxes on your pension. But okay, we're getting a little bit into strategy now. Let's reel back. Foreign tax credit's also great if you're looking to contribute to your US IRA because it gives you taxable compensation. Just keep in mind that there's other limitations to contributing to an IRA, so be aware. Most importantly, for the purposes of this webinar, it makes you eligible for the refundable child tax credit. So again, if you use the foreign tax credit approach, you might still be able to offset your US tax liability to zero, but you get a refund. If you use foreign earned income exclusion and it offsets your tax liability to zero, that's great, but then you're ineligible for the refund. So, I'm going to move away from that because I know it's a lot to digest. But I guess before I jump fully to the next portion is you have to understand what you're filing to the IRS, right? A lot of firms, if you just file a tax return, right, with any firm, especially if you use a US-based tax software, they will just use Form 2555. It might not be optimized for your situation. So you can always file on myexpattaxes.com, right? Even if you don't want to pay or anything yet, you can go in, you can enter your information for 2023. And you'll see before you check out if you're due a refund or you're owed taxes. And then if you see that you're owed a refund and you normally don't ever get a refund, that's going to be a hint that probably your taxes were not optimized before. So obviously once you pay, you would see your tax return and it would say something along the lines like it's more beneficial to revoke the foreign earned income exclusion, to claim the foreign tax credit, to get the refund, etc., etc. But main point of the story is if everything I'm saying sounds like you're a US parent, you have US children under the age of 17, they have valid social security numbers, you're living in a country with a high income tax rate, right? Like basically anywhere in the EU, and you're paying income taxes, but you don't see a refund on your tax return, don't leave that money on the table, right? Have a look, get a second opinion, and see if it's worth it to, file in a different way so that you at least get a refund, right? I mean, if you have 2 or more children, that's a significant refund. So with that being said, let's move on to the next topic of how do you report your child's assets? So we all know that us as US taxpayers, us as adults, US tax-paying adults, we have to file a US tax return, we have to file our FBAR, we have to file potentially the FATCA form. If you didn't know this, maybe it's wise to look at our other webinars about streamlining and things. But with the assumption that we know this, the question is, what does your child have to do? What does your US child have to report to the IRS or the US Treasury? So the first thing is if you have set up bank accounts, brokerage accounts, foreign financial accounts for your child, so foreign, non-US, if you set up a lot of these accounts for your child because you're looking to build their net worth, great for you. That's awesome. But that comes with a little additional complexity, right? Because if they have a combined maximum balance from all their foreign financial accounts, over 10,000 US dollars, they have to file their own FBAR. Just because you add it on your FBAR doesn't necessarily cover it. They have to file their own FBAR if they have their own accounts. So, you do have to watch out for that. Keep in mind that on your own FBAR, if you do have signature authority over your children's accounts, that should definitely be on your own FBAR. And if your child has income, again, if you have brokerages for your kids, if you have investment accounts, blah, 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 if your child has income, you might have to look a little bit more closely. So if your child has unearned income being investment income mainly, so interest, dividends, capital gains, rental income, blah, 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 unearned. They didn't physically work for this income, right? It's not a salary, it's not self-employment, it's not active partnership income. If they have unearned income of over $1,250 in tax year 2023, and there's no federal taxes withheld on their income, you can include their income on your tax return with Form 8814. So we have this option in MyExpatTaxes to do so. But if they, have over this amount in unearned income, but they had federal taxes withheld, if they had both unearned income and earned income, so they have investment income plus salary or self-employment income, or they just have over $12,500 in gross income from all sources in tax year 2023, they're going to have to file their own tax return. And it's a little bit more complicated because basically you have to account for your taxation rates as the parents. So there's something called the kiddie tax return with Form 8615. But main thing is just to pay attention. So if your children, they have a lot of investment income, so again, over $1,250, time to think about how to report that income. If they're just making bank interest of like $50 or less, $10, $1, it's nothing to report there. You can obviously include it on your tax return, but it's not going to be taxed, right? But you don't have to. So it's only if they're over $1,250. Now, if everything I said has just terrified you, which I hope it does, and I always have this disclaimer, it's complex. It's really not easy to shift through this information. That's why we have these webinars, right? But if you've realized you have forgotten or you didn't know that you had to file an FBAR for your children, there is a delinquent FBAR submission process separate from streamlining. So if you figured out you have to, file all these tax returns for your children, that's a different story. Go through streamlining. If you only have to file the FBARs for your children, there is an FBAR submission process. We actually have a separate service, so not MyExpatTaxes, but MyExpat FBAR. And there you can easily file FBARs for your kids without the need to file a tax return. And we support the delinquent FBAR submission process as well in that. So with that all being said, when do you even have to file everything, right? So again, if you are, filing taxes annually, you should know this, that April 15th is the deadline that any owed taxes is due. So whether you're abroad, whether you're in the US, you have to pay taxes by April 15th. If you're an expat, if you're physically abroad on April 15th, 2024, you get a 2-month automatic extension to June 17th to file. But again, chicken and egg situation, because you have to file to know how much you owe. So again, if you think you owe taxes, if you normally owe taxes, if you have a lot of US source income, if you moved abroad in the middle of the year, if you have a lot of untaxed foreign income, right, that's not salary or self-employment income, try to file by April 15th. And otherwise, you can wait till June 15th. And then if you need more time, make sure you file an extension by June 15th to October 15th that you can do through MyExpatTaxes. And the FBAR is not on here, but it's due April 15th, but there's a 6-month automatic extension into October 15th. So technically the FBAR deadline is always October 15th. So, like I said, if you realize you haven't been filing and you're not really sure what to do, well, there's a program for that, right? So don't be terrified of it. It's just you have to start, right? So you can go through the streamlining procedure. It's an amnesty program. And even if you haven't been filing for 10 plus years, it doesn't matter. You only have to file for the 3 back years and 6 back years of FBARs, plus obviously your current year return. And because of the stimulus payments, because of the child tax credit refunds, you'll probably get refunds. So really jump on it, but just remember, if you want to get all stimulus payments, that's from 2020 and 2021, and you want to get any other refunds you were due in 2020, you have to file your 2020 return by June 15, 2024, which means it has to be postmarked mailed to the IRS already by that time. So please start earlier than later. As you're watching this live webinar, we're coming up to the first deadline, April 15. I highly recommend you do streamlining in May and no later than that. So if you need to file taxes and you haven't done it, look into streamlining. If you've been filing taxes regularly, but you haven't been getting these wonderful child tax credit refunds I've been, talking about, have a look at how you filed, and maybe there's a chance to amend them. Again, you still have time because basically the 2020 return is expiring, the 3-year window for a refund. So there's still actually time to amend the 2020 return to get any, do a refund, so to say, by June 15, 2024. If you need more help, right, you can obviously go through MyExpatTaxes. I mean, that's what we built the service for. So you can do it yourself. You can work with a tax professional and have their support as you do your tax return. You can file 1 year. You can file streamlining. You can basically do anything that is needed for a U.S. individual tax return on myexpattaxes.com. And like I mentioned, it's not here, but if you only need to file FBARs for children, there's also myexpatfbar.com. So myexpatfbar.com is also a service that supports, anyone that needs to file an FBAR and not a U.S. tax return. And basically, we are here for you. So there is a live Q&A after this. If you have some burning questions for me and my team, if we don't get to your questions or if you don't want to ask them now, you can always join our Facebook group. It's a very chatty group. You can ask all of your questions. All of the questions then actually get sent over to me and my team, and we answer them, and then our team will then provide you the answer later. You can email us at team@myexpattaxes.com. You can use our chat box. What I'm saying is, if you have questions, hopefully we have the answer for you. And we're always looking to help, right? As much as we can, obviously. So expat taxes is really complicated. Of course, US taxes are complicated in general, but you're an expat, it makes it even more complicated. So we are here for you, and I hope that you found this webinar informational and eye-opening in the event that maybe there are some refunds you haven't claimed yet, and you can always try to claim those refunds with us. Thank you for joining.